So it's NFP Friday, the one day traders treat their calendars like sacred text and their charts like a crime scene. The US dollar has climbed for 4 straight sessions, pushing towards 99 and hitting its highest level in nearly a month. The market is basically saying, show me the jobs data and then we'll talk. So the real question today is simple. Does the labor market confirm resilience, or does it reopen the rate cut debate with a bang? So before you place your next trade, watch this.
Why is fast trade execution a must? Because you're more likely to get the entry price you want and the exit price you want. Reliable, rapid, responsive. Join ATFX today and let's get you started.
Good morning, everyone. I'm Francois, your market analyst here at ATFX Africa, and welcome to your daily market brief. Today is non-farm payroll, and we'll also be breaking down the cable, so GBP USD, gold, and the Nasdaq 100. We're going to kick things off with fundamentals, then looking at some technicals, and add just enough humor to keep the stress levels below, well, full-time trader on NFP day. Okay? Let's kick things off by having a look at today's NFP possibilities. So the dollar index climbed towards 99 this morning, rising for a 4th consecutive session as traders position themselves ahead of the December jobs report for clearer signals on labor market conditions and, by extension, the Federal Reserve's policy outlook. Yesterday's data leaned towards labor market still standing. Weekly jobs claims ended up slightly to 208,000. Announced job cuts fell to 35,553 in December, the lowest level since July 2024. That combination points to resilience, even if parts of the labor story are cooling elsewhere in this week's data mix. In terms of policy expectations, markets are pricing in nearly a 90% probability for the Fed to keep policy unchanged at the January meeting, but traders still anticipate 2 or more rate cuts later this year. So today's NFP isn't just a data point, it's a potential tiebreaker between a resilient labor market, which is cautious Fed, and cooling conditions with more room to cut. There's also an extra layer of uncertainty on the agenda. Traders and investors are also awaiting a potential US Supreme Court ruling on the legality of tariffs imposed by Trump's administration. And the dollar posted its strongest weekly gains against the euro, as signs of easing inflationary pressure in Europe weighed on the single currency. So yes, today is NFP Friday. But it's also Policy Path Day, US Positioning Day, and possibly Tariff Headline Day. So in other words, a normal Friday. Let's move over to the cable. GBP USD is trading around $1.34, staying close to a 3-month high of $1.35 reached earlier in the week. The key driver here is diverging interest rate outlooks. Markets expect, as stated earlier, the Fed to cut rates at least twice this year, with a small chance of a third one, which continues to put some pressure on the dollar. Meanwhile, only one additional rate cut by the Bank of England is fully priced in for 2026, giving sterling a relative yield advantage. Geopolitics is still part of the broader backdrop as well, as tensions remain elevated after the US move out Venezuela's president, which added uncertainty to global markets. Now, on the UK data side, mortgage approvals fell slightly, but less than expected. Consumer borrowing surged to a 2-year high in November, driven by credit card spending ahead of labor tax raising budgets. GBP USD, in essence, is balancing a supportive relative policy path for sterling, UK consumer behavior that's showing strong borrowing momentum, and a US dollar that's, well, firming going into NFP. Looking at the charts, GBP USD remains in a constructive structure. The pair continues to form higher highs and higher lows, and momentum indicators suggest short-term bullish pressure remains intact. Resistance levels are clustered near 1.353 and the psychological 1.36 mark. On the downside, 1.337 is the first key level to monitor, followed by 1.327 and deeper support near 1.303. A decisive break below the 1.336 area would begin to challenge the current positive bias. So the technical question here is relatively straightforward. Does the cable hold above 1.34 into the NFP outcome, or does the data force a broader US dollar reset that changes the short-term structure? Let's move things over to commodities. Gold fell to around $4,460 an ounce as the US dollar strengthened ahead of the key jobs report. So we have a classic short-term tug of war. Stronger US dollar ahead of jobs report, but safe haven demand remains supportive. And gold is still heading for a weekly gain of about 3%. So why the safe haven support? Well, as you know, escalating geopolitical risk remains in focus. US president also warned of a strong response to potential Iranian violence against protesters, and that followed recent US action in Venezuela and subsequent threats to seize control of Greenland using military force. There's also support for continued central bank purchases, with China extending its gold buying streak for the 14th month. So gold today is balancing dollar strength and jobs expectations versus geopolitical risk and steady demand under the surface. Looking at the chart, gold remains in an established uptrend, but resistance is close. The 4,500 level is the key psychological barrier, and a break above it would reopen the path towards the all-time high region near 4,550. On the downside, 4,400 is the first important support level, followed by 4,275. A daily close below 4,400 would increase the risk of a deeper pullback towards the 4,350 to 380 zone. So gold's technical story is uptrend intact, resistance close by, and NFP is our massive catalyst risk that could decide whether price breaks higher or pulls back into support. Finishing things off with equities, more precisely the Nasdaq 100, which is feeling the weight of rotation and scrutiny. US futures were little changed ahead of today's jobs report, and in regular trading yesterday, the Dow rose 0.55%, the S&P edged up a very little 0.01%, and the Nasdaq fell 0.44%. This session reflected a rotation out of high growth tech and into other sectors amid increasing scrutiny over AI-related capital expenditure. Semiconductors and AI-linked names led the decline. Nvidia fell over 2%, Micron fell nearly 4%, Broadcom fell over 3%, AMD fell around 2.5%, and Palantir fell around 2.7%. Meanwhile, defense stocks rallied after the US president called for a $1.5 trillion US military budget for 2027, boosting Lockheed Martin by over 4%. Northrop Grumman was up over 2%, and Kratos Defense was up a whopping nearly 14%. So the Nasdaq is dealing with rotation away from high growth tech sectors and leadership shifting as well. And then we still have NFP, which is an additional event risk that could influence rate expectations which matters a lot for growth multiples. Looking at the chart, Nasdaq 100 is trading around 25,526. Resistance sits near 25,850, followed by the record high at 26,275. Support is clustered around 25,150, with deeper support near 24,700. The index is effectively range-bound, awaiting a catalyst, and today's labor data may provide it, which sets up that big question going into NFP. Do we get enough macro reassurance to support tech risk appetite? Or does the data keep traders rotating and staying selective? So traders, here's what to watch after the NFP print today and heading into next week. First things first, does the US dollar extend this 4-session run, or does today's jobs report change the rate cut narrative once again? Then, can the cable hold above 1.34 and push into that 1.35 zone? Thirdly, does gold break through the 4,500 barrier, or does it retreat back towards support near 4,400? And finally, will Nasdaq respect the support level near 25,200, or does the market keep rotating away from high growth names? Monday's focus will be simple. We'll look at how the market digests today's NFP outcome once the initial volatility fades, because the first move is often very emotional and the second move is where the market starts telling the truth. And with that, we wrap up our daily market brief, brought to you by ATFX Africa, the broker that gives you an edge in today's markets. Head over to atfx.com and, well, go and experience the difference for yourself. Traders, until next time, stay sharp, stay focused, and trade smart.